Now you might be wondering which ETF is the better investment, QQQI or SCHD. The truth is, they're both strong options, but they serve a very different purpose. Before choosing between them, here are a few key points to consider. Let's start with one of the most important factors, the dividend yield. QQQI currently offers a staggering annual yield of 13.92%, compared to SCHD's more modest 3.72%. Now, it sounds too good to be true, but here's the catch. Unlike SCHD, whose dividends are generated from underlying stocks in the fund, QQQI's income comes from an entirely different strategy, monthly covered call options. Yes, you heard that right. In other words, QQQI's high yield is powered by an options-based strategy run by Neos Investments, the fund manager. The dividends are paid directly from income generated by selling these options. This makes QQQI a different kind of income-focused ETF, one that's more complex and sensitive to market conditions. Another key difference lies in how often you get paid. QQQI pays dividends monthly, giving investors faster access to cash and more frequent reinvestment opportunities. SCHD, on the other hand, pays quarterly, which is more traditional for dividend-focused funds. Looking at the past 12 months, QQQI's dividend payouts have been declining slightly. It began with the 59-cent payout in February 2024, peaked at 64 cents in August, and has since dropped to 53 cents as of last month. This fluctuation is largely due to QQQI's option strategy. When markets are volatile and bullish, the fund can generate more income from option premiums, but during periods of stability, those premiums and consequently the payouts tend to shrink. SCHD's dividend, by contrast, has been on a steady upward path since its inception over a decade ago. This consistency comes from SCHD's underlying holdings, which are high-quality, dividend-growing companies with strong fundamentals. Now let's look at overall performance. QQQI launched in February 2024, and it's currently down about 4% since inception. SCHD launched in 2011 and has delivered over 200% total return since then, though it's also down around 2% over the past year. So while the recent performance looks similar, the long-term track record favors SCHD, but there's more to the story. QQQI is heavily tech-focused, with nearly 45% of its portfolio in tech stocks. This makes it more volatile and sensitive to market swings. SCHD, on the other hand, is more diversified with exposure to energy, consumer staples, healthcare, and more, making it a defensive play in uncertain markets. So which should you choose? Ask yourself two important questions. The first, what is your risk tolerance? Are you okay with higher volatility and potential fluctuations in dividend payouts? And two, what are your long-term investment goals? Are you seeking consistent income or potentially higher but less predictable returns? So if you prefer stability, long-term growth, and a reliable dividend, then SCHD is likely the better fit. But if you're comfortable with more risk, want monthly payouts, and are drawn to the potential for high income, then QQQI could be a compelling choice. As this concludes the video, I hope you found it helpful. Please give it a thumbs up, subscribe for more insights, and leave your thoughts in the comments below. Thanks for watching, and I'll see you in the next one.